Hi, I'm Anthony Klatt. I'm here to give you the weekly update from Johnston Grocke, and today we're going to talk about when to invest in shares. The first thing to understand is that actually probably most of you are already invested in shares, because virtually all superannuation funds invest in a diversified portfolio of assets, which would include both Australian and international shares. So for a start, you're probably invested in the shares right now. If you go to invest in shares beyond what you've already got in your superannuation fund though, the first thing to actually understand is what your cash flow is, so that you actually know that you're never going to be a forced seller. So actually understanding your big picture situation is the first stage of determining when you may be ready to invest in shares. Then you need to actually understand the risk that comes with investing in shares, and know that you're willing to take on that risk and that you've got the time frame to wear that risk. So I'd be recommending that you should be looking for at least a 5-year time frame if you're going to invest in any growth asset, including shares. Then I'd suggest that you need to actually be an investor, not a gambler, meaning that you should be looking to invest in something for the long term rather than the short term. So not a trader, but an investor. Then remember to make sure that you're diversified, that you actually have a mixture of all asset classes, including shares, and then make sure that you don't have all your eggs in one basket. That is, don't have all your investments in one asset class, but also if you're investing in shares, not to have all of your investments in just one share, but in a diversified portfolio of shares. Finally, you need to actually seek advice to make sure it is actually the right time for you to invest in shares, that all those things that I've mentioned so far have actually been ticked off. Thank you.